Approached, the financial world waited anxiously to discover what would happen.
So Monday morning at Treasury, we were watching the markets very carefully, in constant communication with market leaders about what was happening once they ultimately filed for bankruptcy. It obviously turned out to be very bad. It was worse than we had feared. And while the credit markets basically shut down 2 days later on Wednesday, the real depth of the damage was not seen for weeks or even months. As I describe it, the housing market damaged our financial system, which then damaged our economy. So this crisis is what caused the severe recession that we're in right now.
We had a deluge of communication. In fact, I had something in the order of 5,000 emails that day. Our switchboard at the firm was blocked, the switchboard at Bank Street was blocked. There was a massive communications problem because everybody wanted an answer. They wanted it immediately. I've never experienced that before, and I'm sure I'll never experience that again.
We were getting calls from not just banks and commercial banks. We were getting calls from large American businesses, blue chip businesses, saying they couldn't fund themselves. They couldn't make their payroll. They couldn't fund their inventory. These are some of the best American companies that have very little to do with financial markets, saying they can't access the basic funding they need to pay their employees. The intensity of this period was unlike anything we'd seen before.
By the end of Monday's trading, $700 billion had been wiped off the global stock markets. The Dow Jones, the leading stock exchange index, had plummeted 500 points. It was the biggest fall in a day since 9/11. Money markets around the world froze up because the collapse of Lehman destroyed the confidence banks need to lend to each other.
And over the 4-week period, the 28 days between the failure of Lehman Brothers and the announcement of recapitalization packages for banks around the world in October, there was an extraordinary loss of confidence, a panic, I would call it.
Good afternoon, everyone, and I hope you all had an enjoyable weekend.
The fall of Lehman Brothers brought the global financial system to its knees. And still the debate goes on. Should the US Treasury have stepped in to save the bank?
I never once considered that it was appropriate to put taxpayer money on the line in resolving Lehman Brothers.
Historians will debate for years about whether, if the US government had rescued Lehman Brothers, whether there would have been a greater degree of financial stability. My own view is that the US government had to draw a line in the sand, not least to make everyone in the world, and world governments and central banks, focus on the fact that there was a massive problem.
I believe that allowing Lehman Brothers to go bankrupt was a tremendous mistake. The amount of money it would have taken, 20 billion, 30 billion, compared to the destruction in value that followed the Lehman bankruptcy and the complete shutdown of the credit markets, the billions and billions and billions of losses that were experienced in the market subsequent.
Now, when the Federal Reserve lends money, they can loan money to financial institutions. The law requires the Fed to be secured so that they're not taking much risk. And so in the case of Bear Stearns, they lent $30 billion against a pool of mortgages. In the case of Lehman Brothers, the question is, what assets could they lend against?
I think the tragic thing for the United States was that we came into this crisis without an adequate set of tools to withstand, protect the economy from the acute stress you saw in the financial system. The constraints we faced in Lehman were one example of those kind of constraints. We should not have been in that position, and that's why it's so important that we move more quickly now. And we're moving very, very quickly. We're still in the midst of a pretty severe economic crisis globally, and yet we're going to move with comprehensive regulatory reform while we're still trying to get recovery back on track. That's a symptom of the importance we attach to trying to put in place reform. And it was it was something that should not have happened.
2 days after the bankruptcy, Barclays Bank got what it wanted all along. It sealed a deal to buy the bulk of Lehman's North American assets for $1.75 billion. It was a bargain, much less than they would have paid had the bank been solvent.
I think all of us would say this is something that we never expected, that we could actually combine with the U.S. bulge bracket firm. I don't use the word transformational lightly. This transaction was transformational.
But for many backroom staff, there was no happy ending.
2 weeks after that, I got a letter, Federal Express, to my house from Lehman Brothers stating that they're no longer honoring my severance agreement. Everything's been taken away. So that really set me into a tailspin. It's like, how could they do that? You know, after 20 years of service, now I have absolutely nothing.
A month later, Dick Fuld made his first and only public appearance, summoned to Washington to account for the disaster at a congressional hearing.
I mean, do you have anything to say to the people that are watching this right now, that are wondering, you know, why this has happened? You have nothing to say?
Are you going to be in the testimony?
Absolutely.
Good.
I wake up every single night
Please wait till then.
thinking,
Nothing else to say beyond that?
what could I have done differently? In certain conversations, what could I have said? What should I have done? And I have searched myself every single night.
I thought he should have apologized. I think he didn't confess to anything. It made it sound like he personally, Dick Fuld, did not cause the collapse of the firm. Like he denied everything, that it wasn't his fault. And I didn't think he was honest.
I can look right at you and say, this is a pain that will stay with me for the rest of my life. That's all.
You belong in jail! You belong in jail, you criminal! You should go to jail right now!
Dick Fuld may yet be called to account in court. The former chief executive has been subpoenaed in numerous civil cases which allege the bank misrepresented and overvalued its assets in the months before the collapse. He declined to be interviewed for this documentary. Lehman Brothers was the catalyst for the crash of 2008. Those who were there on Wall Street that weekend say what brought this American giant down was the love of money. It was greed and hubris that led to the fall. The bankers soared so high for so long, they thought they were invincible, but they were flying too close to the sun.
When I went to college, I learned in Economics 101, you do not finance long-term investments with short-term money. And that's what happened. And I believe it happened because greed took over, and the returns were so big, and so many people were making so much money that they lost all fear. And risk did not become a factor in doing anything. And that was the real dilemma.
All right. Thank you all. Okay.
Next week, what caused the greatest financial crisis since the Depression? We examine the boom before the bust. To find out more, go to bbc.co.uk/love of money.
And the second of the series is here on BBC Two, same time, 9 o'clock next Thursday.
On Newsnight in half an hour, some of the top voices in the Afghan crisis, including the man who alleges wholesale fraud in the elections, and America's top representative in the region, and the Foreign Secretary. Join us at 10:30.
But before that, new time slot for Mock the Week.